The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and man, it's been quite a wild trading event since we were last on the air on Friday. Markets closed yesterday. You did have futures open, and man, you had some volatility. I have the chart up here on the left side of the S&Ps. There is where we ended Friday action, 43.44. We actually traded higher early Sunday evening into early Monday morning. You trade to a high of about 43, let's get it exactly, 43.91, and then proceed to trade 140 points lower in the S&P to 42.50. That low made basically in between the futures action from Monday, the close, to Monday, 6 p.m. Eastern Time. We make a low of 42.50. We're hanging at 42.60 all the way till 3 a.m. Eastern Time, and then markets charge back higher. If you told me last night that markets would be flirting with positive territory by the time I went on the air, number one, I would have thought that that was not likely. And number two, I probably would have thought that it would have taken a lot more something happening in terms of concrete difference to whatever was causing the market to cascade to lower prices. The tensions ratcheting up, more than tensions really at this point, as all the headlines saying Russia basically invading Ukraine, Putin out there with a pretty strong speech, to put it lightly. Not good, to put it lightly, but nonetheless, quite a clawback from 3 in the morning. We got the UK putting sanctions on some Russian banks, some Russian individuals. We have the U.S. saying they're going to follow suit today. We have Germany talking about the Nord Stream 2 is on hold. So maybe that giving some pause to maybe lessening things going on. But nonetheless, S&P is right now negative by 7 points. We see where we are on the chart. Now, what's interesting is you take a look at the highs. This is just a 5-minute chart, okay? So we're talking about the highs. Basically, over the weekend when markets were open on Monday, when futures were open on Monday, we trade down 140 points to 42.50. Interesting that we're chopping around right on the 618. If this ever turns into an ABC down, you're talking about 140 A to B leg. We claw back a 618. You're talking about 140 point C to D would bring us right to 4,200. You're trading at 43.36 right now in the S&Ps. Nasdaq 100, you talk about some volatility, man. You want to do the same thing. Nasdaq 100, futures open Sunday night into Monday morning. You're pushing 14,150. You trade down almost 600 points, 13,580, and man, this thing claws it back 330 points almost higher off the lows we were at about 3 in the morning last night. Dow off 109 points. Dow was just above 34,000. You're talking about a 600 point pop from the lows last night. Now Bitcoin struggling as well. We had a 36,000 handle on Bitcoin last night. You got crude accelerating higher. Tensions, Ukraine, Russia, Germany in the mix with the Nord Stream 2 pipeline. Crude rising to $95. Sunday night, we were down as low as $89 in crude. Gold contract, 1905. You were up to 1918 at one point. Now, check out the note and bond action, man. You spike up to 127.09. You reach that level again at about 3 in the morning. Now, you had yields at 127.09. And I'm pulling up the yields right now. Right now, we're at 1.94%. The 10-year yield had dropped to, I think, 1.83, 1.84. I mean, we were almost going to get a 1.7 handle on the 10-year when we were well above 2% just recently. Volatility everywhere in spades, but we pull back as the markets accelerate higher. You have yields, lower price, and higher yield. So the yield back from about 1.84 to 1.94. I mean, just like that. The yield from 127.10 down almost a full point. That is some severe action. But anytime you're going to have the Nasdaq 100 moving almost 2%, you were down 2% in the Nasdaq 100, even more than 2% at one point. And just like that, we're down less than 0.5%, and you were even higher than that, clawing it back almost to green territory. I said to my dad this morning, chatting with him, I said, man, I opened my eyes this morning, and I did not think that we were going to be where we were, but my worry was the futures last night, folks, they were escalating in pretty dramatic fashion. I mean, it looked like, yeah, we might be able to find a lower level in terms of where we were chopping around, and that's where it ended up happening. But you were down 2% with plenty of room to trade overnight. I wake up, and yeah, they clawed it back. It could have been worse. S&P's down about 6 points. Okay, outside of the geopolitical news that is going to persist today and probably going to persist rightfully so, let's jump into some of the action we have. And we already got some earnings out this morning. And I believe I have the headline up here. Where are we? Well, we're going to jump to Home Depot. I got a lot of stories up here. We got Macy's, DraftKings. Thought I had it up here. We'll put it back. Okay, I'll have to pull up Home Depot numbers. I'm pretty sure I have it out. Up with their numbers. They're down $9. Pretty decent numbers when you check it out on a weekly basis. So you're going to open at 335, right? You're basically going to give back the entire move it had from October. Remarkable. You trade from October of 324. You're probably going right back to 324, where you chopped around for the better part of almost a few months between about 320 and 340. Home Depot gives it back. I thought I had this up there. I will get it after the break. We're going to talk to our man, Hincks, after the break. No, I don't have it up here. It's up here. It's in one of these tabs. It's hiding on us, folks. Yeah. Here we go. This is what I was talking about. Okay. So this is an opinion piece, but it talks about the numbers here, okay? Will our pandemic love affair with do-it-yourself survive inflation? So, Home Depot, same-store sales today, 8.1% in the fourth quarter, above expectations of 5.3. I just showed you the stock's trading lower, all right? 11.4% gain in fiscal 2021. Here's the kicker. The company forecast only slightly positive comp sales growth in the year to January 31st, 2023. Slightly positive comp sales growth to January 31st, 2023. It also projected low single-digit percentage growth in diluted earnings per share, following a 30% increase last year. The bottom line is they pulled forward a lot of growth. They pulled forward a lot of earnings growth. Home goods, one of the big winners in the pandemic. Now, here are same-store sales. Could you imagine if you didn't know what happened in the pandemic and you just see some of the accelerations and it was like a case study, and the professor said, here's what happened in Home Depot's business. Explain to me a scenario where this type of accelerated growth for a period of 4 consecutive quarters would make sense. I mean, it would be hard-pressed to imagine it. I'm not sure a pandemic would come to mind. It might, but I'm not sure even that would come to mind, as in the acceleration of sales growth that's going on. Fiscal stimulus, a big reason of that. Now, they just came in at the 8.1%, okay? They had numbers of 23, 24, 24, 31, and then still 4, 6, and 8. I mean, another way of saying this is that they had an amazing same-store sales growth, and they're going to continue to grow for 3 to 4 quarters. Now, I don't even have Home Depot, folks, but these are staggering numbers. And even if it takes them a year of just keeping with these numbers, I mean, they're going to hold on to all of these gains and still grow in the single digits after all of this. Their earnings are going to grow as well. This is part of it. Americans become less confident about making major purchases as we're coming out of the pandemic. But man, those are strong numbers. And I would be looking possibly to get in some Home Depot. We'll take a look at that. We'll come back and talk to our man, Kevin Hincks. Should be an interesting conversation. Stay tuned, folks.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right. information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get S&Ps down 9 right now, Nasdaq down 68, and yeah, as our man G. Brew is saying in the den, how many more projects can you do around homes? And it's a great point. That's kind of what I'm talking about, saying that it's remarkable that they're even going to hold on to those types of gains. Imagine all the money that they were doing to have comp sales rising 23% in the first quarter, 24, and then 31. Then you compound that with 5%, 6%, and 8%, and they're going to hold on to that. Comp store sales are going to be flat to slightly growing over the next year or two. I mean, that's a staggering same-store sales growth. I mean, this company, Home Depot, man, it's remarkable, and it's going to persist. It is, because our lives have changed, folks, in dramatic fashion. Now here, this will be a good transition to this headline. HSBC bankers grounded as pandemic cut business flights by 90%. Long-haul flying has reduced drastically in the past 2 years. These are usually pretty decent paying jobs, right? You're traveling multinational HSBC business flights. You're traveling around Europe, you're traveling around the world, you're traveling around America. Whatever it is, it's business travel, and it's not happening. So all these people are at home. They're spending more time at home. They're not flying around, doing as much travel. They're at home with their family, etc. And this isn't even the situation where people are working from home. This is just that they're not away from their family when you're spending your life traveling, as some do. The bank's average worker racked up 191 miles of business travel last year. Not quite enough for one round trip between their UK and London, down from, what is that? Let's call it 14 times as much in kilometers. 14 times as much. Geez, yeah, you're talking about, what is that? 1,900, almost 2,700 miles would be the correlation. So think of that. They were doing 2,700 miles versus basically not even doing a ticket. And all those people are staying at home. Remarkable. And that's not even talking about people who are now working from home. I just have a great friend in marketing, advertising business, and he just got a job as a brand manager in New York City. He'll be working in one of those big high-rises in New York City, and they're not back in the office yet. And when they do come back, though, it's going to be hybrid. I think they're going to be in the office 2 to 3 days a week, at home, etc. So you see how that goes. But HSBC, they're not doing traveling at all anymore. Okay, jumping around to some of the stocks with action today. Going to start it off with DraftKings. They're a little bit lower, continuing the slide. They get a downgrade from Wells Fargo to equal weight from overweight, cut the price target to $19 from $41. concerned with the company's path to profitability given the pace of the increase in expenses. That is the fear in this equity, folks, okay? I have a small position in a retirement account. We don't have any DraftKings in my newsletter, Rocket Equities and Options. I'm looking at it, though. I really am, because, man, you've gotten quite a slide here. You're in an industry that is growing, okay? If you ever have an opportunity, folks, do you want to be in the best company in a dying industry, or do you want to be in the worst company in a thriving, growing industry? You always want to have the wind at your back. You want to be in the growing industry because that's where there's always going to be growth, lifting everybody up. Online gambling is a growth business, to put it lightly. The spending that they're incurring, that's a growth business too, unfortunately, and that's where it breaks down. Now, they closed at $17.29. You're going to open another 80 cents lower on DraftKings. That's going to be an all-time low print at $16. You jump over to the Analyze tab. Okay, you're talking about a company valued at $6.7 billion right now. Now, I would make the case, folks, that there's tremendous value in this brand. And I'm making the case just in my own head, okay, to start taking a look at this equity. Because I don't envision that you're going to get down to an area that it's tiddlywinks that anybody could buy it. I mean, you're talking about quite a brand. Now, yes, the problem with this, jumping back to, this is the article from February 18th when they're out with their earnings last week, okay? They missed on, I'm giving you the whole case here, okay? They missed on the number of people. That's the most important thing probably. Just like any social media company, how many monthly active users do you have? How many monthly unique paying customers do you have? They missed 2 million versus 2.1 million, and they missed after spending more money than the market wanted and losing more money than the market wanted. Okay, it's important you understand the risks of this type of an equity. Could this equity go bankrupt eventually? Yes. That's the bottom line. Okay, you're losing $1 billion a year almost. They forecasted an adjusted loss, excluding some items, in the range of $825 to $925. That was bigger than the market was looking for in terms of a loss. They've been down dramatically. Now, they spent nearly $1 billion on sales and marketing last year. It's basically their whole loss, right? Almost double the allocation it had in 2020. You're going to see this continue. Even the CEO says trying to accelerate the company's growth through acquisitions, including the purchase of Golden Nugget Online Gaming, is expected to close this quarter. Investors are eager to see what's next as they walked away from trying to buy Entain in October. Just approved in New York and Louisiana. They raised the revenue forecast this year, $1.85 to $2 billion. So the market was looking for $1.9 billion. Okay, they're now saying they're going to take in $1.85 to $2 billion. Here's the kicker, whether it's true or not, on this equity. On the earnings call on Friday, the CEO said he expects DraftKings to be profitable by the fourth quarter of 2023. Now, the company valued at $6 billion, 6.7, okay? It has room to pull back. You could have said the same thing on Friday, right? I'm looking at value on this thing. It's basically at an all-time low. It's below where you were when the thing went public shortly after the pandemic began. All right, you're trading at $17.29 as of the close Friday. You're going to open now 90 cents lower on this equity to $16.40. But look at the type of deals that come with this. So what I had pulled up here, and this report goes back to August, okay? You're talking about a company that is even in the talks to pay ESPN for their branding. Now, DraftKings already has a relationship with ESPN. The deal that came out, if many may remember, in August of last year, the Journal had a report talking about ESPN exploring the potential of a $3 billion deal to get into legal sports betting by licensing their brand to major sports betting companies. They were looking into talks with Caesars, with DraftKings, to license its name for branding on the digital sports books. You could see how DraftKings could just basically white label their own product that's already in there, make it an ESPN sportsbook, and run it. ESPN is already partnered with both companies. It'll be interesting to see how this unfolds as you go forward. Caesars provides betting data and odds across the ESPN platforms, and DraftKings is the network's daily fantasy partner. Plus, its sportsbook is integrated across various ESPN digital platforms. So they already have relationships with both those companies. But imagine, the company valuation right now is $6.7 billion, and they're in talks to sign licensing deals for $3 billion alone, because they have the technology and the flow to run the sports book for ESPN and maybe just pay the licensing fee and connect it. I mean, you're just approaching levels, folks, on this equity in that industry. You may face some pain over the next year or 2 or 3 or 5, or it may go bankrupt, right? But if you have a longer term business plan, and you know, Cathie Wood, she catches a lot of flack, rightfully so, for some of the things that she does and the arguments she makes for some of her equities. But one thing she does say that I kind of like on certain parts of your investment portfolio is she takes a 5-year investment outlook. Is her year, 5 years. And I encourage you, if you take a look at this industry in 5 years and a company like DraftKings, and you got it valued at $6.7 billion, and you got it trading at a all-time low this morning, okay? Consider whether you think there's a risk warranted for the potential in 5 years of what that equity and market cap might be worth. Stay tuned, folks. We're going to be back for the open. This will be an interesting one.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&Ps right now, putting things on a 5-minute chart to see the action as we have some overnight action on Monday into Sunday. Right now, you're getting a little bit of an acceleration to lower prices again. We're down 21 points. That's 0.5% right now on the S&Ps, trading at 43.21. You got the Dow right now, Nasdaq 100 down 98 points. We got some volatility right now coming into this market as we had some volume coming into the market with a 925 bar and volume, of course, coming in with the markets open for 45 seconds. All right, let's jump over to what else we have going on. I'm going to take a look at some of the streamers. So this one's interesting. You take a look at whether it's Amazon, Disney, and Reliance. They're talking about a $5 billion cricket prize fight. All these companies trying to get into India. Now, Disney already has the license, I guess, for this cricket. I'm going to get this. This is for the Indian Premier League, or IPL, a cult event that's considered the Super Bowl of cricket, spotlights the jostle among streaming platforms to win eyeballs in the largest consumer market that's open to foreign films. Last year's edition, 380 million viewers. Whoever wins the telecast rights likely win millions of new subscribers in India. That's where you want to be, folks. So Disney kicked off its Disney Plus OTT service in India in March 2020 at the start of the IPL season. They already have it. Yeah, let me get back up this. Disney has it through 2022, I believe it is. Yeah, and this is going to allocate the rights for 5 years starting in 2023. Amazon will join the bidding wars. It looks to spruce up its sports offering for Amazon Prime. That makes sense, like a no-brainer, right? Amazon, it's spending $5 billion to get into India. That's basically like pennies on the game that they're playing. Disney secured the event's telecast rights through 2022 with the acquisition of Star. They're going to be in the fray, while Sony's expected to bid as well. And then you have, helmed by Asia's richest man, Reliance Industries, and its television partner Viacom are in talks. And they're also going to include James Murdoch-founded Lupa Systems, as well as Comcast. Listen to these names, right? It's India. It's reaching India and the citizens of India, and the prospect for growth, $5 billion. You got 1.4 billion people. Now, one of the arguments, of course, is talking about the streamers' costs, right? Similar to the DraftKings argument that we just made there. They are going to make some money, folks, but what's going to be the cost to do it? They got revenue going to beat. They're making some great points in the YouTube Tigers Den, saying higher taxes to all the city-state. It's going to make it difficult for a lot of that money to go to the bottom line for the online gaming companies. That's something to keep your eye on, for sure. As I mentioned, you're not dealing with a company like Amazon that has cemented itself as a role that is not going anywhere. Great company to invest maybe retirement funds, a little bit more secure. You're investing in DraftKings, you better believe that they're spending $1 billion a year and they're losing $1 billion a year to grow a business that's highly competitive, that's going to cost money to grow. But I imagine that business, online gaming, that they will be around, because there's going to be a few big players in that industry that are able to spend and acquire customers, and just like you're seeing here. One of the reasons why I like the Disney play in the long term is because streaming is a tough business that takes a lot of money. And it's nice that Disney is going to have the parks and the movie theater business to add the revenue, especially, what helped out Disney in their last earnings? Parks business, back in dramatic fashion. I tell you, folks, from being in Florida, I've been talking about it in my program. My family, we got exposed to COVID. We got COVID. We were all vaccinated, thankfully, except for the kids. They did well also. Now we're much more confident with the kids being exposed, having some form of immunity, that we can bring them around large groups. Last weekend, talking about 8 days ago, we went to the zoo. We got an annual pass to the zoo now. This weekend, we go to Busch Gardens. We got annual passes at Busch Gardens now. We're fortunate to be able to spend that money. But it's happening. Travel stocks, it's breaking out, folks. Disney, the parks business. You're going to see movie theaters eventually catch up as well. International travel, the airlines that do international travel, I'd be wary for the reason that we talked about with that HBC article, talking about business travel basically gone, 96%. They're doing no travel, from doing 2,700 miles. Every single employee doing 2,700 miles a year versus every employee doing 200 miles, just like nothing. But you're going to see that, and I think you're already seeing that rotation, and it's at the very early stages, folks. I was joking. They're going to come back and load up on some travel stocks, because going to Busch Gardens, first you have the annual passes. We're very fortunate in Florida. If you live in Florida, to be able to pay for an annual pass like that, especially if kids, you can go back. Busch Gardens got a bunch of great animal exhibits. We were looking at cheetahs. We rode the rides. Then, of course, where they get you, though, they get you in the quick queue, right? Because Some of the rides, folks, if you just show up with a regular ticket, 2.5 hours, they tell you. 150 minutes, 2.5 hours. I mean, you go there for 5 hours and maybe you get 1 or 2 rides. So then they encourage you to do the quick queue. Well, then you got to pay for the quick queue. Well, do you want the quick queue unlimited? Which means you can ride any ride unlimited times except for, I think, their brand new ride that they're opening right now? Or do you want the once per a ride quick queue where you get to go on each ride once and avoid the line? Now, here's the kicker. They say avoid the line. It's still, when you have the quick queue, a 30 to 60 minute wait most times for the big rides. All right, even with that. Now, they are sold out of the unlimited quick queues for like the next 6 weeks already, through spring break through March. The only ones they have available are the once per ride, which that's a great one too, right? You go on each ride once, you get to jump the line and still wait in the quick queue line once. If you have kids, that's kind of nice as well. Those, almost $100 a pop. So you're paying $100 a pop just for, and it's a supplier demand deal. And guess what, folks? They're sold out of the other ones, and they jack those prices up according to supply and demand, almost like the airlines do with their ticket prices. Okay, so if you're buying it leading up to the day, very close, they already have sold a lot, they jack the prices up because I think they only have a certain amount. Who knows? They probably don't, right? They probably sell them till they're facing the blue, which is why we wait 30 to 60 minutes. But part of Disney's last earnings, they talked about that they have more services, they had higher revenue per person. I'm living it, folks. It's happening, and we're at the very beginning of it. We just bought the passes. We're going to be going back often. We're going to be spending money on the quick queues, etc. So think about that when you think about these travel stocks and having the money to support some of the costs that go with the streaming services. Because guess what? If you're Netflix, yeah, Netflix is great too, folks, okay? Netflix at $386, down 1% from $700. Long term, you probably have some nice value there. But they don't have anything to support them besides the customers paying for the recurring payments. Versus when Disney, prior to the pandemic, I've talked about it before, but it's almost hard to remember the world that existed. Disney, going back to 2019, okay, they had a heck of a 2019 coming into the pandemic, going from 110, finishing the year at 146, okay? Now, part of this had to do with offering up the details of some of the services that were going to come with Disney Plus, okay? Talking about they're going to undercut Netflix prices, but you know what they also did in 2019? They had $10 billion of box office gross receipts. I think they had 9 or 10 different movies in 2019 that all grossed over $1 billion. And it was, you know, the usuals, the Marvels, the Star Warses, the animated films that they're so well known for. But that's all coming back, and travel's coming back too. And Netflix has to compete with Disney and Amazon for all those content rights. Stay tuned, folks. S&P's down 26. Be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps right now. You're down 18 points, man. You put this thing, check it out. I'm going to back it up for a bit. We're going to put this thing even on a daily. You talk about some volatility already. Let's take the Fibonacci numbers on here. Check out the bar we got going right now for February 22nd. We're talking about a bar on the S&Ps, folks, a low of 42.50 and a high of 43.91. 141 points right now. It's the beginning of trading. Markets have been open for 12 minutes so far this week, and we got an S&P bar of 140 points, all the markets in the red. Continuing the conversation. So they're talking about taxes, rightfully so, in the YouTube Tigers Den. My dad's sending me over some information, checking it out as well. New York City takes 51% of operator gross gambling revenue, compared to 11% nationwide. New York City bringing the hammer down on online gambling. Now, what's interesting is I did some Googling over the break. At first, okay, I'm going to bring a couple things into the foray here to since I'm talking about these bettors and what to think about. First article, not familiar with gaming today, but talking about the costs. All right, and I'm not even sure if DraftKings does business in New York City. I assume they do, but I shouldn't assume. Yes, of course they do. 4 sportsbooks were given the green light to open for business and start accepting mobile bets January 8th. This is dated January 17th, updated January 21st. So going back, and what it talked about was when New York went live, okay, they are talking about 51% of gross gambling revenues. Now, I got to jump around here because I got a couple different articles in terms of what says what. Now, in terms of neighboring states, you're talking about, oh, come on, I think it was Pennsylvania. Was it around 16%? Oh, that's too bad I don't have them. I was reading it all about it, and I'll get it on the next break. Yeah, so 11% is the median number nationwide. And I got to get with what Pennsylvania and Jersey are at. Yes, Jersey, 14.25% I have in one article. So you have a lot of the Jersey people that were gambling that were New Yorkers just trying to get action. New York City passes it. They're going to take 51% of gross gambling revenue. That's gross numbers they're taking. Basically, they're well aware that you're handing over, aside from marketing expenses, basically a turnkey digital operation that just skims 10 to 15% off all wagers. Now, the standard for betting in most sports books is a spread of 10%, basically, which means that you must risk $110 to win $100. That's the house vig, folks. That's how they make money. It's a negative sum game, okay? They're taking money out. The gross sum of wagers, it's a negative sum. You have to beat the vig to become profitable, which is about 10%. FanDuel came out when this was all happening saying, even with the increased taxes, online sports betting in New York will be the same as they are in neighboring New Jersey, despite the massive tax rate differential. So they're acknowledging that they need to have much lower margins in New York than they do Jersey, because imagine you're paying a much lower VIG in Jersey, and I will get this one for sure. Here we go. Pennsylvania charges 34%. In New Jersey is 13.5 to 14%. Okay, so higher numbers there, higher here as well. But quite a difference, but it will be interesting to see if they have to eat some of those costs, and that's what's going to happen, because they realize that they would be in trouble if they started shifting it, and they're not familiar with who this person is, but they're rightfully saying that a lot of people say there's been talk of customers being price insensitive, okay? But even recreational bettors, folks, they usually think they're pretty astute, right? Even if they are recreational and they're losers in the long run, in terms of financial losers in the long run, they will, it's been 110 for the longest time, folks. Having been around online gambling, sports betting is a 110 to win 100 game. It's a 10% VIG. You lose 110. You win 100. That's how the bookie makes money, okay? 115 to win 100, it just seems like they're taking $5 from you. It just seems wrong. So the point being, they're going to have to raise those, they're going to have to eat some of the costs in high tax areas, which will eat a lot of their profits, because 51% of the gross number, I mean, you got to be pulling 51% margins to break even. 51% margins to break even in New York City. But even if they break even in New York City, if you're going to be one of the biggest sports books in the country, you probably have to have a presence in New York City no matter what. And you're seeing FanDuel. I'm sure you're going to see DraftKings and the likes as well. Okay, let's jump around to see what else we have going on. And as we do, these markets, we just got an acceleration and we got the Nasdaq 100 in the green. That's what I like to see. I was going to joke that I vowed last night I would not do my program if we were not green by the morning. No, can you imagine? And here we are, Nasdaq 100. We are, folks, 433 points off of the lows made last night at 6 o'clock. Remarkable. Can't overstate the volatility in these markets. Let's check out the VIX right now as we continue. VIX, we're up to 32. You're pushing 29. You got Macy's out with their numbers, up 7.4%. Man, Macy's been on a tear. You put this thing on a weekly. Last year, charge from 10, make it to 38, finish the year at around 25. You're going to be up 7% alone today. And you see the pullback from the full run of July up to the highs of late last year. We pull back right to the 618. This might be another run. And man, you get another run. You get an A to B. Your A to B is talking about $22, and you take that off of your low, you're talking anywhere from $44 to $46, which would be your A to B, C to D. Man, quite a market, to say the least. Okay, what else we have up here? Let's see. Some talk of half-point rate hikes in March. It's all going to be about the CPI data March 10th, folks. Put it on your calendar. March 10th is the CPI data for the month of February. I imagine if we're in line with expectations, there'll be a 25 basis point. If we get anything super hot, 50 points will be like a 50-50, if not a 75-25 probability for March. Let's see what else we got. Talking crypto. Yeah, this one was an interesting one if you saw. Unfortunately, Porsches, Lamborghinis lost at sea may cost Volkswagen $155 million. A total of $401 million worth of cars may have been on board. A cargo ship carrying 4,000 vehicles caught fire last week, and they just basically had to let the fire run. They evacuated the ship. $438 million of total values of goods aboard. Now, the ship is still intact. They're going to go break that down. 2 large tugs with firefighting equipment expected to arrive yesterday. That's quite a price tag, right? You think there might be a way to secure that if you're going to lose $500 million worth of merchandise, man, you might be able to afford some money to make sure that doesn't happen. Maybe they're insured, and that's how they get it done. That cargo ship, roughly the size of 3 football fields, was on its way to Rhode Island from Germany's port of Emden. So if you're looking for any of these vehicles, you might want to get out and buy one like right now. So BMW had none of their companies. Mercedes is not aware as well, but Volkswagen's got a lot of vehicles out there, folks. You're looking to buy a Volkswagen, there might be a little supply shortage to the tune of $160 million worth of cars that just ain't on the market. Yeah, Volkswagen, Porsche, Audi, Bentley, Lamborghini, all of them. Stay tuned, folks. Be right back to finish up the show. S&P is about to go green. Be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Man, oh man, folks, this brings to mind the chart that we had up talking about the amount of times that you had 2% moves or greater, that you reclaimed those losses and turned positive. You got the Nasdaq 100 now positive by more than 0.5%. Folks, you're pushing up 500 points from the lows last night, and that's when 135 points was going to be 3%. You've moved, what, 3.5%, just ballparking, something like that, from just the lows of last night. It's just remarkable. We're positive. S&P's up 10. Nasdaq 100 up 77. You get the Dow negative 70 points right now. Jumping over one of the headline articles. Yeah, Bitcoin. Look for 30,000. It's possible. Not sure it's going to happen. This is one analyst, and the reason why I tend to agree, folks, check out the chart on Bitcoin right now. We're trading at 38,000. Bitcoin catching a bid with the rest of the market. You put this thing on a weekly, right? I mean, it seems like we should get down there. Maybe that's when we got down there, 32,855. but it seems like the trend is still lower, and 30,000 is just sitting there waiting to be tested. That's the area beginning of 2021. We found a bid, also found a bid in June of 2021 as well. Let's jump around. I bet DraftKings, I might have been right, folks. Check out DraftKings. You're up 2.2% right now, and you get the Nasdaq accelerating. But remember, they got a downgrade. They were lower on the downgrade with the market. You're higher. You're sitting basically at their IPO prices. You're probably back at about $7 billion. Yeah, $7.2 billion. Folks, you get down to $5 billion for a company like this that has a plan to be profitable in a couple of years and is growing immensely. If you have a longer-term business plan horizon, investment horizon, I should say, I see tremendous value there. Doesn't mean it's going to happen. I gave you all the bear cases, right? They're losing $1 billion a year. They missed on the amount of people. New York's charging 51% taxes of gross gaming revenue, and they're going to have to offer those gaming odds at the similar rates, especially when you're talking about big cities, New York, Jersey, etc., where people can just cross borders. Boy, it's going to be an interesting day in the markets, folks. We got our man Basil Chapman. He's up next for the Tiger Technicians Hour. Our man Larry Pesavento with Trade What You See coming up at 11. Fast Market at 12 with your host Kevin Hincks, Tom White. We got our man Steve Rhodes live at 1 o'clock. We got Dave White live at 2 o'clock and Tunnel live wrapping up. We're positive, folks. Remarkable. Stay tuned for today's trading action. We're going to get a two-way market. We'll see. Stay tuned. Basil's up next.
Building wealth trading in the stock market seems impossible to most people. They